Hello everyone, welcome to the Chartered Accountants Academy video tutorials. My name is Davidzo Paradzai, and in this video tutorial I'm going to take you through a revision of the ITC Mock 2 paper 4. The objectives of this video tutorial are to take you through exam technique, that is comprehension of the scenario before you start answering your exam. Make sure you have a thorough understanding of the case study. As you read, try and identify triggers. Link them to your pool of information, to your pool of knowledge. Where could this be leading me given the information that have been given in the case study? So have a thorough comprehension of the scenario so that when you answer, you'll be able to answer the correct things. Interpretation of the required. Break down the required before you start answering the exam. That way you will answer exactly what is being asked of you, and you avoid mind dumping or linking the required to a required that you had done before. We will also assist you in generating solution points that are valid and will earn you marks. You are supposed to have important pervasive skills as you go into this exam. That is comprehension, thorough understanding of the scenario, knowledgeable about what is happening in the environment, environmental awareness, understanding of your surrounding, what has been happening in the business environment, what has been happening in the profession. That way you will also answer with relevant solution points. Business acumen, the way you write your solution points, the words that you use. Are you speaking professional words? Are you writing words that relate to the business, to the professional world? Do you have analytical skills? Given information, are you able to analyze that information? Are you able to compare financial statements, current year, prior year? What do the line items mean, and interpret that? Problem solving. Given information, are you able to solve particular problems? Are you able to show the examiner that you've got these pervasive skills? This will also earn you marks through communication, logical argument, presentation. That way you will increase your chances of passing. So make sure you're not taking this as a technical exam, purely technical, but you're also showing your pervasive skills. So going on to scenario comprehension, there are specific issues that you're supposed to have identified within the case study. Who were the auditors? Harry Hippo, Chartered Accountants. So that when you write your solution points, you're not just referring to the auditors. Mention them by name to show the examiner that when you read, you understood who the auditors were. There was mention of a component auditor. By virtue of Tangana being audited by other auditors, what does that mean? It's a component auditor. It should come to you as a trigger to say, what can I expect in the required, given that subsidiary was all audited by other auditors other than Harry Hippo, Chartered Accountants. Who was the client in this case study? Planet World. What was the year end of the client? February 2019. It is important that you understand the operations of the client. Planet World was into the selling of organic foods and providing advice on healthy eating. If you understand what the industry is about, that way you will have a correct mindset with regards to what you're going to answer in your what? In your solution. The structure of the company. Did you understand that it was a group? Who is in the group? How many subsidiaries do they have? Right? That way you'll be able to address all the issues completely. Ownership of the entity. It's a private limited entity and it was not listed. What does it mean if a company is not listed? And what does it mean if it is listed? So avoid assuming that every case study will come with a listed entity, because you end up writing invalid solution points. The governance structures. When you read working paper B11, were you able to query the governance structure, the board composition? Were you able to query information that you were given against good corporate governance, against what King 4 says? Maybe are you able to identify concerns against what the CPC says, what the Companies Act says? You should be able to identify information that you have been given against correct and good corporate governance principles. What are the specific issues were you supposed to identify? That the entity is IFRS compliant, right? What does it mean if they're IFRS compliant? There were significant transactions that occurred during the year. As a foreign subsidiary was acquired 1 July 2018, what happens at acquisition? What happens at consolidation? Are you able to audit that? As farms acquired farming machinery, which has been leased to contract farmers, does this mean IFRS 16? What's likely going to come if I'm told that a subsidiary acquired machinery and it has been leased? Am I supposed to see a line item of rental income because there is leasing going on? A new fleet of vehicles was acquired for all companies in the group. I'm likely going to see a decrease in repairs and maintenance because we have a new fleet of vehicles. Am I going to see an increase in insurance cost? Am I going to see an increase in depreciation? Link the information that you have been given, connect the dots, exercise critical thinking to say, this is what I've been told. What am I likely going to see for this entity? How am I likely going to apply this information? Earth Farms was being accused of using man-made fertilizers and pesticides. And also the finance director was suspended in October 2018 to pave way for investigations of misuse of company funds and other assets. Could this be linked to integrity of management? If the FD was suspended because of misuse of funds, could they be private expenses that have been put in operating expenses? Could the assets be overstated? Their integrity is questionable. What's likely going to happen at Planet World given the behavior of what? Of management. Using man-made fertilizers and pesticides, would they misstate their financial statements because of the kind of behavior that they've been exercising throughout the year? So look out for specific issues, look out for significant transactions that occurred in that case study as you write the exam. What were the accounting policies within Planet World? How are they going to apply IFRS 15, IFRS 60, IFRS 9 if applicable? Make sure you are alert for those new standards, for those topical issues, right? Can you perform a preliminary analytical review given the information that was there at Planet World? Are you able to compare 2018 against 2019? Why do we have a sudden jump of other income, sundry income from 0 to 100%? Why have they included rental income under revenue? Is that the correct cost classification? You should be able to perform a preliminary analytical review on the financial statements that you've been given. What were the company's strategy? Backward integration to acquire earth farms? Have an understanding of who is Planet World? How do they earn their monies, right? Control over value chain was also another strategy within Planet World. That is what they wanted. So already your mindset is thinking, is this strategy going to assist them? Is this strategy consistent with the information that I'm being given? The CEO was not at liberty to disclose their current strategy, right? Could this be anything to do with integrity of management? Or you're actually told, as Harry Hippo Chartered Accountants, you're also auditing a competitor. What does that imply to you? Is that fine? Should you exercise confidentiality? What's going to happen given that you are auditing a competitor and now the CEO is withdrawing information from you because of that? So we will move on to required B, which read, prepare an email to Meg Han discussing with reasons whether or not you agree with the assessed risk of misstatement per financial statement line item according to the preliminary analytical review in AP 100 for the following line items: gross profit, profit before tax, taxation, and you'd also earn presentation and logical flow marks. Right, so we will break down the required. You are being asked to prepare a proper email, right? If you've been asked to write an email, let it be an email to Meg Han from Meg Han at Planet World, from ITC student at ITC, right? Or from audit manager at Harry Hippo Chartered Accountants. Date, you write the subject, correct email format. If you've been asked to write a memorandum, correct memo format. If you've been asked to write a report, correct report format, so that you take advantage of that communication mark, right? You're supposed to have a discussion of the assessed risk of material misstatement for the line items based on the preliminary analytical review as found in working paper A100, that is over gross profit, profit before tax, and taxation. Then you would get your presentation marks. So make sure you break down the required before you start answering so that you address all the issues and you address them correctly. How are you supposed to approach the question? Apply information in the scenario, making use of triggers, right? What common mistakes were found? Students were generalizing solution points. You were told that Harry Hippo Chartered Accountants preferred the deferred tax computation. There was a temptation to interpret that incorrectly, to say if they prepared the deferred tax computation, then it is correct. Other students were faced with a mind block. But what are we saying? We had triggers. For gross profit, you know that there is a rebuttable assumption in ISA 240 that there is risk associated with gross profit, associated with revenue. So based on the risk assessment, to say revenue risk is low to moderate, based on what ISA 240 says, what can you say? There is a rebuttable assumption that according to ISA 240, revenue will be misstated, right? You are told they have got a revenue line item, right? Application of IFRS 15, it's complex, it's fairly new. There are chances that they will be mistakes. They acquired a subsidiary halfway into the year. Did they consolidate well? Chances are revenue will be misstated, right? When did they acquire the subsidiary? 1 July 2018. Do they actually consolidate for only 8 months until year end? There is a risk that revenue could be misstated if they did not what? Consolidate well. Did they eliminate intra-group transactions, right? Planet intended to obtain a loan from the bank, which can be an incentive to overstate revenue and understate expenses so that they portray a good picture to the what? To the funders of finance, right? There was a subsidiary in Tanzania. They could have used an incorrect exchange rate in translating revenue figures from Tanzania to the functional currency that Planet World was using, the USD. Revenue cut-off issues at year end. Did they perform proper cut-off, right? The significant move in the ratios. Previously, we didn't have any rental income. Now it's 100%. Can you attribute that to the leasing that was done over the newly leased equipment, right? They were triggers in the scenario that were supposed to show you that revenue could be misstated, right? Is rental income supposed to be part of revenue? Apply your cost classification knowledge so that you query the information that you have been given and you conclude, do you agree or disagree that revenue, gross profit should have been assessed as low? Then you tell us, I would have assessed as medium or high, and you'd get a mark for that, right? Profit before tax. You have the information, you have the triggers. What can you deduce from the preliminary analytical review that you have done, right? Operating and other expenses increased by over 40%. Where did you get this 40%? You did a quick calculation. So there is risk of occurrence and could be a possible hub of unauthorized or fraudulent expenditure. Now that the FD was suspended, is it that he was putting private expenditure within what? Operating expenses? There was a 20% movement within repairs and expenses, but we are told they bought a new fleet of vehicles. How then do we have repairs and maintenance increasing? Is it because when they acquired the motor vehicles, they failed to capitalize costs that were supposed to be capitalized and they actually expensed them? Is this figure of repairs and maintenance, is this figure of operating expenses correct given the information that I've been given in the scenario, given the triggers that I saw? You then query the line item profit before tax, right? The translation of Tangana expenses, errors could occur. Now that there were issues surrounding contingencies on consideration that would have to be paid if Tangana gets a profit before tax of 50,000 and above, what implication does that have on your line item profit before tax? Could they have tempered around with profit before tax so that they achieve the conditions that have been set over the consideration that would be paid? We are told that they got a loan. We do not see any finance cost line item. So given the triggers, try and think. I'm told they want to get a loan. I expect to see finance cost. And so the profit before tax is likely going to be materially misstated because I did not see any finance cost. The FD was suspended, right? We said there are issues surrounding his integrity. So could they have been override of controls given that the FD was suspended? Could they be fraudulent activities given he was suspended? Those are all triggers that were supposed to take you to valid solution points, right? On taxation, we are saying deferred tax and current tax is a complex calculation. Were they able to calculate it correctly? Chances are they could have missed something and rendering the taxation line item materially misstated, right? And like I said, there was confusion to say now that HHCA prepared the financial statements, deferred tax is actually correct. There is a risk there of self-review. Will they be able to pick up their issues that they would have? that would have occurred, given that they are coming to audit the information as well, right? There was acquisition of a subsidiary. The taxation in Tanzania, the taxation in Zimbabwe, is it the same? So using those triggers, what can you conclude on the taxation, right? The funds that were embezzled, that were taken by the finance director, they are not deductible for tax purposes, right? How did Planet World treat them? If they were deducted, that is incorrect because they are prohibited by ZIMRA, right? The integrity of management based on the several examples that we saw is questionable. There's a risk that there might be understatement of tax expense in order to pay less tax because their integrity is questionable, right? So make sure you've got an analytical mind, you've got a critical thinking mind. You're able to connect the dots, the triggers that you saw in the scenario. What could they mean, right? This brings us to the end of this video tutorial. I will see you in the next video tutorial. Thank you.